Welcome, dear traders. You are watching a recap of the Asian session. Cautious sentiment prevailed in the Asian trading. The main stock indexes slid into negative territory. China's economic woes and a strong rally on the greenback were the main bearish factors for Asian markets. The yen rose sharply. Investors are now expecting a possible intervention by the Bank of Japan. The US dollar jumped to its 5-week highs in the morning amid the likelihood of an increase in the key rate. Last Friday, hawkish expectations were fueled by a stronger than anticipated producer price index. Markets assume that the Fed will stick to aggressive tightening for a longer period of time. Fed policymakers have also mentioned more than once that inflation is far from the 2% target. A similar comment was made by San Francisco Fed President Mary Daly that leaves the door open for another 25 basis point rate hike in 2023. However, according to the FEDWATCH tool, only 11.5% of speculators have factored in a rate increase at the September meeting today. Nevertheless, it was enough to stimulate further growth of the US dollar, as well as the yield of treasury notes and the prices of goods denominated in dollar. The US dollar index, which tracks the greenback against a basket of 6 main currencies, broke through the critical resistance level of 103 points. However, it failed to consolidate this high in the Asian session, dropping to 102.80. The economic calendar is uneventful today, therefore risk appetite will hardly increase. The greenback also asserted strength as a safe haven asset. It was moving in the range of 102.80 and 103.00. Given that the US dollar index ended the previous 4 weeks in a positive territory, the bullish trend is likely to persist. The main driver remains the forecast for new rate hikes this year. Until the next Fed meeting on September 20, the US dollar is likely to rise higher amid hawkish predictions. The dollar-yen pair soared to the annual high of 145.20. In September last year, the Japanese authorities intervened on Forex when the yen grew above 145. After that, its exchange rate dived to 140. However, there was no such sharp drop in the morning. Yet, the Bank of Japan sold an unlimited number of 5- and 10-year government bonds in fixed-rate operations. The regulator tried to limit the growth of the national currency. As a result, the yen declined slightly within the intraday range. At the end of the Asian session, it consolidated at 149.80. Another bullish factor for the yen was the risk of sentiment, and risk assets fell even more due to negative news from China, and the dollar-yen pair ended the Asian session in the range of 144.60 and 145.20. Economic expansion in China slowed down significantly in the second quarter due to several factors. To start with, it's still reopening after several years of restrictions. Instead of an increase in the inventories, there was a fall in this indicator. China's property crisis deepened as another huge developer did not pay interest on the 2 US dollar-denominated bonds, and trading of a country garden stock was stopped in the morning. Exports of Chinese goods also decreased markedly due to geopolitical tensions and changing priorities. Now the largest buyers, multinational corporations, prefer high security to low prices. The sluggish economic recovery in China, the largest importer of crude oil, adversely affected oil prices. Commodity currencies are unable to climb due to risk aversion, falling oil prices, and the rally of the US dollar. The Australian dollar declined to 0.6460, its 9-month low. It was moving in the range of 0.6454 and 0.6510. At the same time, it tried to rise amid weak bullish momentum, and the Aussie advanced to 0.6489 and moved to consolidation. However, the sentiment on the risk assets remains bearish today. The New Zealand dollar also ended the Asian session in the red price corridor of 0.5954 and 0.5994 due to rally of the US dollar. The bears pushed the Kiwi to the support level of 0.5900, its lowest level since November 2022. Given that it has been falling for the 5th day in a row, it may dip below 0.5983. Moreover, the Kiwi is facing pressure ahead of the meeting of the Reserve Bank of New Zealand scheduled for August 16, and the regulator is widely expected to keep the key rate unchanged. And that's all for now. Hit the subscribe button and keep close tabs on the market developments with us. See you soon.